Good morning from Westpac and welcome to another Finance AM podcast. I'm Ray Spies, Westpac market strategist. In the financial markets, overnight we saw a more upbeat session. US and European equities have recovered after the recent sell-off, and the S&P 500 is currently up 1.3% on the day. The defensive US dollar has fallen, which is consistent with that. However, commodities remain under the weather, and bond yields also fell overnight. In the currency markets, the US dollar index is down 0.5% on the day. The Aussie dollar rose from 77.40 to 77.81, and the Kiwi rose from 71.80 to 72.17. The Aussie Kiwi cross, it eked a slightly higher range of 107.75 to 108.00. In interest rates, the US 2-year Treasury yield fell a basis point to 0.15%, while the 10-year yield fell from 1.67 to 1.63. And in the Australian government bond markets overnight, the 3-year yield fell a basis point to 0.25%, while the 10-year yield fell from 1.72 to 1.69%. And regarding commodities, Brent crude oil down 2%, copper down just 0.2%, and safe haven gold sometimes up 0.5%, but iron ore down 2.6% to $208. In terms of the economic information out overnight, none of it really market moving, but worthy of note that the US leading index, which is like a composite of many things, it made a record high. It rose 1.6% for the month of April. And the high-frequency labour market indicator there, the weekly initial jobless claims, fell again. We heard also from Fed Hawk, the lone hawk you'd have to say, Kaplan, who again said that the Fed needs to talk about tapering and taking its foot off the accelerator. But he also said that other Fed members were open to debating tapering in coming meetings. He also said that the April jobs report exposed supply issues, labour supply that is, and he suggested that unemployment benefits are making workers hesitant to return to work. So those labour market comments are somewhat fresh coming out of him. The Bank of Canada Governor Macklem delivered a fairly positive financial stability report, but he did highlight abnormally low interest rates, household leverage and housing credit as some areas of concern. On the day, what's out that could be market moving? In Australia, we'll have the April preliminary retail sales report. We're expecting a gain of 0.8% for the month. The annual growth rate will spike to an extraordinary 24%, but you don't need to take too much notice of that. That's really caused by base effects after the lockdown. And elsewhere in the world, we'll have a bunch of PMIs, manufacturing and services PMIs from market. And also in the US, we will have existing home sales data. Well, that's it from me. Thank you for listening. I'll be back again same time on Monday morning.